doing really is to convert, or rather remit a certain amount of US dollar equivalent, right? But conversion happens in onshore. With the internationalization of RMB, conversion is offshore in Singapore. Yeah, and you wanted to do that because if this is going to be a frequent invoicing as for imports in RMB, you want to have RMB just like the way you maintain a US dollar account to facilitate your settlements.
Maybe I have two simple questions which I have to consult with Mr. Cheng. Now, one I think maybe of interest to some of you is that were the eventual adoption of the PRC new gaps by the FIE resulting in different tax liability as compared to when they are using the old China gaps? Do they end up have to pay higher tax? Let's say because they fair value a lot of things. Second question is that we learned from Mr. Cheng that under the new law, you have to make accrual for termination benefits of employees. So you anticipate that you're going to terminate, let's say, 20 employees, you've got to make accrual for that. So my question follow from there is that must cash be set aside for meeting such future payment for termination of employees?
Thanks, Ms. Lim, for your questions. Regarding the first question, under the PRC law, the tax and accounting system are two distinct systems, are independent of each other. So, theoretically, the change in accounting standard does not affect the calculation of income tax payable. So, the final amount is the same. But in practice, we calculate the income tax payable based on the financial accounting figures. So, the amount of workload for tax reconciliations may differ under different accounting standards. The adoption of the new accounting standards narrowed the gap between the tax and accounting in some aspects, but widened the gap in other areas. For example, revenue recognition. The SAT, State Administration of Taxation, issued a notice in 2008 regarding the revenue recognition, number 国税函2008-875号, in which revenue recognition criteria has been greatly converged with accounting standards, with those set in accounting standards for sales of goods and the provision of services, except that under tax law, under accounting standards, revenue can be recognized only when it is very probable that economic benefit will flow to the enterprise, will flow to the company. But under the tax law, it is not a prerequisite for revenue recognition. But however, in the respect of revenue recognition, the gap between tax law and the accounting standards has been narrowed. But for other aspects, such as fair value measurement for financial instruments and investment properties, fair value measurement is not allowed under tax law. Thus, if you adopt fair value model for financial instruments and investment properties, then you should make reverse tax adjustments to reverse the carry amount to original cost. And for investment properties, additional depreciation may be taken to reduce the taxable income. So the amount of workload for tax reconciliations may differ for different companies based on their practical conditions and circumstances. This is the first question. For the second question, regarding the employment contract law, I have mentioned in my presentation that under two scenarios, liabilities for termination benefits should be accrued during the terms of employment contract rather than when the termination of the rather than the termination, upon the termination of the employment contract. But no cash need to be set aside for the payment of such termination benefits required by law or any regulations. You need only to set aside a liability, to accrue a liability in your books, not actually physically set aside a cash to satisfy such requirements. Thanks.
Thank you. Any other question from any of you?
This is for Mr. Charles concerning your slide number 30, whereby you say that the international assignment of an employee to China, there is a marked arrow to say salary reimbursement. As far as I understand, based on circular 22 or 29, and there's another 62, I think, that salary reimbursement is strictly as a matter of practice not allowed for most of the companies. So I'm not quite understanding that why is there still a salary reimbursement line?
Yes. As I mentioned in my presentation, it's a common arrangement in terms of international assignment when a company sent an employee to China. And the salaries of the employee should be paid by the company in Singapore, just like an example. Also, as the employee work in China, so it is also a common practice that the Singapore company would like to retrieve the salary from the China subsidiary or other related parties. So reimbursement of salaries need to be arranged. Under such arrangement, the reimbursement of salaries would not trigger the PRC individual income tax issues. Only under the condition that the individual takes form of the payment for the individual takes form of recharge of employment costs to the Singapore company without a markup. Basically, quite some conditions need to be considered when determining the corporate income tax and individual income tax under this arrangement. This is just a simple answer based on quite some assumptions. When the real case occurred, we would like to suggest consult the tax expert on the detailed analysis for the arrangement, because the contracts entered between related parties and the functions of the employee being carried out in China are all concerned. Under the arrangement, as I mentioned in the presentation, the investor may need to consider several questions, as indicated in my slides on page 30. And when these questions are answered by the tax expert or yourself, it may be more clear whether this would trigger a permanent establishment issue in China. What I would like to mention is that all the answers need to be considered on a comprehensive basis, rather than on a simple basis. And maybe one or two the answers to the 5 questions is a disadvantage to verify that your company have no PE in China. But if the other 3 answers to the other 3 questions is strong enough to support that your company will not create a PE in China, the result might not be favorable to you. That is to say, it is not a simple yes or no. answer in relation to whether a PE issue is created.